there is a massive problem right now with doing covered calls. I'm going to break down exactly what you have to know with covered calls, how you can make money with them, how you can lose money with them, which I bet you most people will lose money with them, and the strategy right here on the bottom that I make $1,000 per day doing. So everybody thinks about stock options as doing stock options. It's not always like that. You have to understand what the underlying stock is going to do, and then you make an option play based on that. So when you're doing covered calls, what move are you trying to capture in the stock price? Are you bearish? Are you bullish? Do you think it's going to go way up? Do you think it's going to go way down? And I see a lot of people right now shooting out covered call trades, but they don't really have a high degree of certainty if the stock is going to go up or down. So most people are going to say, oh, well, I have a bunch of shares of, say, NVIDIA, for example. I'm going to go sell covered calls on that. But the problem with doing covered calls and actually owning the shares, because if it's covered, that means you own the shares. If you own the shares and you're selling covered calls, you're probably going to say that you're bearish NVIDIA stock, because why would you want to limit your upside? When you sell a covered call, you are limiting the upside in your share price. So then you're going to say, well, I'm a little bit bearish on NVIDIA right now. And the thing I'm going to turn back on you is I'm going to say, if you're bearish, why do you own the stock straight up? Why not just go sell your shares? That could be a problem. And then you're probably going to turn around and say, well, the covered call that I sold, it's way out of the money. So if it goes up to that share price, I'm okay to sell the shares for that price. I made a good profit. I collected the premium when I sold the covered call. All is good. But there's one really, really big problem with doing covered calls, because if you happen to go into money, you have to either close out the contract at a loss, or you have to get rid of your shares, or you have to do this one thing that is your one out in order to keep your shares on something that you're bullish on. This is how you keep your shares on a covered call if you happen to go in the money. But there's really a big problem with this, and you're not really going to make money in the long run doing this strategy. So let's go into that. So we're going to go through all this right here, but don't forget, I'm going to show you my strategy where I make $1,000 per day consistently in a low risk way. I'm going to explain to you how you could roll your cover calls higher if you happen to go into money, but you want to keep your shares. And then we're going to go into this strategy right here that could totally change your mind. I scaled from nothing to over $2 million right now to $1,000 a day in options cash flow. So let's break this down right here and then we'll hop into that. So NVIDIA right now is $135 per share. Let's say that you sold a cover call at a 125 strike. You're now in the money by $10 per share because you sold a 125 and it's currently 135, so you're in the money. So what do? Do you get rid of your shares at $125 per share even though they're worth 135, or do you just close out the contract and take the loss, or you could roll your contract higher? And this is the hack right here that most people don't understand about rolling your cover call contracts higher. So let's break it down right here. Let's say that you have this 125 call, but there's 6 months left of duration in that contract. Maybe you could buy this contract back for $1,000 right here. So you come out of pocket $1,000, but then what you do is you go resell another covered call, but instead you choose a 145 strike price for 9 months out, so 3 months longer than from here to here, from 6 months to 9 months, and you collect $1,200 in premium to do that. So your net premium, you're up $200 because you bought it back for $1,000 and then you resold it for $1,200. But the part that most people don't understand is that you're now able to sell your shares for $20 per share higher. You were going to sell them for $125 right here, but now you could sell them for $145 right here. That is the biggest hack with doing covered calls, and then you roll them higher. But the problem with this is you're just going to be in the chase of rolling higher and higher and higher as time goes on. Let's look at the NVIDIA chart right here. So I personally know a ton of people that got into NVIDIA when it was super cheap, but they sold early because they had to sell early, and this is why. So this is all split adjusted right here on this chart right here, but you could see like January of 2013 is when NVIDIA started to really take off. I know so many people that got into NVIDIA at roughly like 14 bucks per share, and then they sold maybe like a $30 covered call. Now here's the problem with it. They're like, I got in for 15. If it goes up to 30, I'll sell my shares with the covered call. It's all good. I doubled my money. I collected the option premium. It's all good. But the problem with that is they sold out for 30, and then it ran all the way up to here, up to almost $150 per share. So from 30 to 150, they lost out on all that upside. So this is why I was telling you guys earlier in the video, the covered calls can smoke you super hard. Yes, you doubled your money, but you left the money on the table from $30 per share to $150 per share. And yeah, you could keep rolling your cover calls higher and higher and higher and higher, but eventually they're just going to go into the money, because in this time period right here, you weren't able to roll your contract from say 30 to 40 to 50 to 60 all the way up because the share price is going up too fast and you just keep going back in the money on all these ones that you keep rolling up at a higher strike at a longer duration. So it doesn't work. I really caution you guys to not do cover calls and not do poor man's cover calls where you buy an in-the-money leap and then you go sell cover calls on that. Because it's like if you're buying a leap, you're bullish on the stock, but then if you sell cover calls, you're kind of like bearish on the stock. So you're almost betting against yourself in that situation right there. I get it that everybody wants to get that cash flow of selling cover calls, and I'm going to show you one of the best ways to get cash flow, how I make $1,000 per day. I'm going to show you that in just 1 minute. So let's flip it the other way. Let's say that you're bearish on Nvidia and you have a bunch of shares from down here in this cheap level here, and you rode it all the way up. Congrats for you, you made a bunch of money. But if you're bearish up here at this price level and you go decide to sell cover calls, and maybe you think Nvidia is going to fall to like $90 per share, you're never going to be able to collect enough premium by selling cover calls to make up on your loss that you're going to have on your share price from 134 to 90. It would be better in that situation just to go sell your shares straight up. Now the flip side again is if you go sell your shares, maybe you're going to have to pay a crap ton of taxes on them right here too. This is actually a situation that I was just in my Charles Schwab account. This is some of the stuff I have open right now. I was selling a bunch of cover calls on Tesla recently, and this was when it was roughly like $4.75 per share. I almost got rid of my shares because I felt like it was extremely overvalued at $4.75, but I didn't quite go in the money to get rid of them, which is okay. But if I would have went in the money, this gain loss right here would have been roughly $170,000. I would have been up 170K. So the guaranteed move that would have happened is if I would have sold my shares, if I was way up, I would then have to go pay taxes on $170,000. The guaranteed loss is to pay taxes. But what if Tesla would have just kept going up or even staying flat? Would have sucked pretty bad there to sell all my shares, not been able to capture some downside to buy more shares at a cheaper price, and I still would have had to pay those taxes. But what if there's a way that you could get paid to buy something that you already feel like is cheap in the future for a cheaper price than what it currently is right now? Just say that out loud. You get paid a bunch of money to buy something you're already bullish on at a cheaper price in the future when it's probably going to be more valuable. Does that sound like a good deal to you? That right there is how I generate $1,000 per day. And here's the criteria, and then I'm going to show you back into my Charles Schwab account for an exact trade that I have open right now that you could make a trade on and potentially make a crap ton of money on it. So the criteria is the stock has to be trading below intrinsic value. You don't want to go do this strategy on something that's trading above intrinsic value because you don't really have any margin of safety built into that trade. So you have to be able to understand if the company is cheap. Number two, does that company have a durable competitive advantage? Is the company like Nvidia maybe, where there's really no competition in town right now? AMD is the next competitor, but there's really no other game in town if you want to build an AI data center and you need a lot of compute power. Nvidia is the top dog for that right now. So that checks a box right there. Do they have pricing power? If they want to raise their prices, are the customers still going to buy from them? Probably, because they have a durable competitive advantage. They can raise prices because there's not really much competition. And am I okay to hold that company for the long run? The answer has got to be yes if you want to do the strategy right here. So let's look into my Charles Schwab account. I'll show you the exact trade I made right now, explain it, and then we're done. All right, so we're going to look at this on Nvidia super quick right here, and we'll go through the Tesla one too. So basically what happened is I got paid $21,000 to buy Nvidia shares for $100 per share anytime between right now and 6/18 of 2026. The current price of Nvidia is roughly $135 per share. So why would I not want to buy it for $100 per share in a year and a half from right now when a company is probably going to be more valuable, more top line, more bottom line growth? The company is probably going to be worth more. The share price is probably going to be higher. Of course, nothing is guaranteed, but I feel like Nvidia is trading below intrinsic value. They have a moat, they have pricing power, they have a durable competitive advantage. So I like this setup right here. Now this $21,000, I get this money credited to my account immediately. And actually what I did was I went and bought some calls on Nvidia right here. And I took this $21K and rolled that into the premiums right here. So really I got these calls for like $37,000 minus $21,000. So roughly $16,000 is what I got these calls for, assuming that Nvidia stays above $100 per share. So this is definitely a bullish play right here. And of course, it's a very small percent of my portfolio, but this is a hack right here. And I do this every single month on companies that are trading below intrinsic value. And I don't have to keep cash in my account to support this trade right here. So this is called selling put options. And you can see right here, my margin requirement is $31,000. So essentially what this means is with Charles Schwab, I just have to maintain $31,000 of equity in my account to support this trade. Now, if NVIDIA happens to tank in share price, this is going to go up because it's more likely to go in the money. But if NVIDIA goes higher and as time goes on with this option contract right here, the likelihood that this is going to go in the money is going to go down. So this margin requirement right here is going to go down too because it's less likely to go in the money. And you can see right here, I sold it for 21K. I could buy it back for 16K right now. So my profit right now is about $5,000. As time goes on, as NVIDIA shares go up, if they do, this market value right here is going to go down. I want to sell this for $21,000 and I want to buy it back for practically nothing. That is the name of the game. Sell something for a lot of money and buy it back for practically nothing. So this is how I make a crap ton of money every single month, and I average roughly $1,000 per day. But the key is you have to be able to value NVIDIA, understand how to use the psychology of everybody in the market against them to benefit you, to get a good deal on NVIDIA, make sure you're getting good premiums on it. You got to be able to do all that stuff. If you don't feel comfortable doing that, do my course below. It's going to totally blow your mind and change your life. You'll be able to get in the course members only Discord and see all my trades in real time. You could talk to me, all that good stuff. But if you don't want to do my course, watch this video right here. There's a crap ton of stuff going on in the market right now. Warren Buffett's in cash pretty heavy. I'm going to break it all down for you, what's going on in 2025. See you guys there.